Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm talking about Microsoft stock, looking ahead for 2020 after the recent stock market dip. Is Microsoft a buy in 2020? Let's jump in. And of course, before we get started, if you like stock market analysis, investment ideas, and personal finance videos, then make sure you subscribe to the 40 Finance channel. Thanks to everyone for your support so far. Alright, so this video is coming right off the heels of an earnings warning by Microsoft associated with some of the concerns in China. Most of this surrounds their Surface 360 and other computing products that Microsoft makes. Most of the stuff that you see at Microsoft stores if you're ever at the mall. But they called out that this was a supply chain issue and that there is concern going forward if the current situation escalates anymore. So it's basically Microsoft giving a heads up to investors like, hey, in the coming quarters, we expect to miss in our office product segment. And that's really important to understand, the office product segment, which I'll get into here in a minute. All right, looking at Microsoft stock as a whole, you got a price right here today of $164. That's off of a high in the 52-week range of about $190. The PE today sits at 28.65, and the forward PE actually takes a small jump up to 32.68. And we've got a price to book ratio of 12.94. So my opinion of this stock today and where it sits, I would say that maybe it's a little high on the price side. Now, with that being said, the growth of their cloud business has really reignited a fire in Microsoft and in the market as a whole right now. PE ratios are generally high even after the pullback. Generally speaking though, compared to the rest of the FANG stocks, Microsoft's price is right in line with the Googles and the Apples and the Facebooks of the world. All right, looking back at historical valuations from the last several quarters, Microsoft still, even with the pullback to 165, is still trading at its highest valuation over the past 5 or 6 quarters. You see back in March of 2019, you had a trailing PE of 27.36. Today we're at 32.63, and you go down to price to book ratio. Way back in 12/31 of 18, you had a price to book of 908, and that's steadily gone up to where we're at today, which of course is 1294. So there are plenty of more expensive stocks from a valuation standpoint out there on the market, and it's just important to keep in mind that the valuation is trading a little higher than even where it sat just 12 months ago. So in some respects, the pullback that's in the market right now could be an opportunity if you could get that price to 150 or 145, which seems, absolutely insane to even say that. But if we were to see that type of activity in the market, then it would just be a phenomenal time to pick up some Microsoft, knowing that it's already recently hit a high of 190. It probably wouldn't take too much good news to get traders back headed in that direction. All right, so in response to the earnings statement that they came out, I want to just call out my opinion, which is just that I don't think this is a huge downgrade on Microsoft. So what I did was pull together some of the metrics from their 2019 annual report. And here you have the categorization of their revenue. And when you look at those categories, all these numbers are technically in millions, but it equates to billions the way that we'll talk about it. And we start with the first line, which is server products and cloud services. And you see from 17 to 19, they have grown by $11 billion. Then you go down to office products and cloud services, and you've got a much smaller growth, but still growth of $6 billion between 17 and 19. So right off the bat, you see that the core growth for Microsoft in 2019 was server products and cloud services. And that, of course, includes their Azure products and their big move under their new CEO to get into more enterprise and big cloud business. It's been a huge success. And this is where the lion's share of the focus from investors will be on Microsoft going forward. And to call this segment out even further, they had a buy line at the bottom. And what companies a lot of times do in these categories is they can't figure out where they want to put the money because they're always worried, well, can we still show growth in this category or that category? So they're kind of mishmashing around. But when popular questions come in this case for Microsoft on their cloud server software, they typically try to put some sort of notation that indicates how those business lines are doing. And here with Microsoft, you see the note that our commercial cloud revenue, which includes Office 360, Azure, the commercial portion of LinkedIn, Dynamics 365, and other cloud properties. So that revenue was $38 billion in 2019, which is up from $26 billion the year before and $16 billion back in 2017. So that little line, I shouldn't say little, but that line of business in Microsoft has grown plus $22 billion over the last 3 years. So now they've spread it out for some reason across a couple of these categories, but undoubtedly there was other pieces, parts that trickled into the Office products and the Windows line and things like that. So when you think about the earnings scare and you're worried about, the production of the Surface 360 laptop, right? I'm not going to say who cares, but from a growth standpoint and what Microsoft's really doing well right now, the China thing is pretty much the least of our concerns going forward. Now, what would be a concern in a foreign market like China is if there was disruption to the market as a whole and they could not increase the sales of their cloud computing in Azure, right? So if they're going to enterprise businesses, they're going to large accounts, and all the fears about what Corona is keeps people away from purchasing new products or finishing contracts, then that starts to really shake things up on the Azure line. But I wouldn't worry too much about, Office 360 that you and I have on our computers, and I certainly wouldn't worry about laptop sales. Those things are all going to probably take a hit this year, but the bigger win, honestly, can be had in the cloud computing space. All right, taking a look at the TipRanks dashboard with the best performing analysts, and we have 24 buys and 1 hold. It's important to note that this did get refreshed after the earnings warning, so this is fresh for today. All of the analysts have stuck on except for 1, so 24 buys, 1 hold. You got a median price target of $197.50, which is a 20% upside from where we are today. So for a long-term play, you certainly have a nice little upside, certainly for the next 12 months. You got a high bar in TipRanks of $212, you got a low bar of $175, and even if there is some disruption to earnings, you get that small 1% dividend. Again, if you're in the game for the long term, if this is a 10-year stock or a 7-year stock for you, then I think that Microsoft is as strong as it's ever been. I think they're doing great things. I would definitely buy in 2020. The only advice I can say is with the turmoil in the markets right now, can you be patient and potentially see another $10 or $15 come off that $165 price? I don't think anybody knows here at the end of February how much more the market will dip. And so I wouldn't be in a gigantic hurry to come out and buy really just about anything right now. I personally am going to wait a couple weeks and just be watching every day and see what seems like the best time to get in. But from a long-term perspective, If you bought it today at 160 or you bought it 4 months down the line when it's 175, if you're in it for, 5 to 10 years, does it really matter? Probably not, but it's always fun to look for the best possible price. All right, guys, so that's my 2020 take on Microsoft. Hope you guys enjoyed this. Please give me a like and subscribe if you enjoy the content. I really appreciate it. We'll see you on the next video.